Hello everyone, welcome back. I got some really good ones for you today on this Tuesday, October 15th, 2024. A lot's been going on with the markets. That's what we're going to be focusing on for today's video. So welcome back. Glad you made it. Glad we could hang out together. And let's dive right into these markets, shall we? Starting with those bonds and rates. I guess we'll start with interest rates. So we're looking at 125 basis point cut next month for November, and then an additional 25 basis point cut to the Fed funds rate for December, putting us at 2 more interest rate cuts of 25 basis points each to finish out 2024. This has made the market pretty giddy. Asset classes, rich people, things like inflation. They like lower interest rates. When you're cutting interest rates, you're cutting the value of the dollar. You're raising the opportunity cost of holding dollars, and you're pushing people out onto the end of the risk curve. You're seeing it, you guys. All 3 major stock indices, gold, silver, platinum, Bitcoin, everything. Median home prices, prices you're paying at the grocery store, really everything just continues marching higher as these forward-looking markets kind of sniff out the problems we're having with inflation and predicting more of that inflation, you guys. So the Fed's done a really good job of decimating the middle class and erecting this wall that's running down the center of the American economy, where if you're on one side of the wall, you're just printing money, and if you're on the wrong side of the wall, say just working for a salary at like $50,000 a year, well, you're making about $25,000 a year in real terms. And if you have no assets during this essentially hyperinflation, I mean, that's being a little bit hyperbolic, but really rampant inflation, you see that stone wall running down the center of the economy, just getting taller and taller and taller. Looking into my hazy crystal ball, I see more of this coming. The rich are going to get richer, the poor are going to get poorer, in my opinion, for the next little while. Fed would really need to raise interest rates more, and they're cutting them, guys. They're doing the opposite of what they should be doing. And this has no political, it doesn't matter if you're, which side of the aisle you're on. It doesn't matter if Kamala wins or Trump wins. The market's getting what it wants, which is lower and lower and lower interest rates. I see that continuing. Moving on to the bond market, we have that 10-year yield right now hanging out at 4.03%. So back above 4% for the 10-year yield, you guys, just something to keep an eye on. I don't think that rising 10-year yield would become problematic unless it went to like 4.5% in a really short period of time. I think that could start to cause downward pressure for risk asset prices, but a 10-year yield hanging out at only 4%, and we've been spending like the last few weeks in the 3s. Epic, you guys. It's a very low yield. I think yields and rates are going to continue moving lower and lower. So I'd like to see that 10-year yield roll back over or just stay flat. And even if it were to go up to like 4.2%, we could probably handle that before we'd start seeing sell-offs in the other markets. So 10-year yield at 4.03%, that 2-year yield at 3.96%. So the 2 and the 10, pretty flat yield curve, you guys. You want a normal upward sloping yield curve, you got a pretty flat one right now. But I suppose it's a little better than an inverted yield curve, which we've had for like the last year or so. Pretty wild. We talked a lot in this channel about how that inverted yield curve is often a predictor of a recession. It's kind of like storm clouds. You can have storm clouds and no rain, so you can have an inverted yield curve but no recession. But you can't have a recession or a storm without those rain clouds and without that inverted yield curve. So put another way, the inverted yield curve is predicted like 11 of the last 9 recessions, because sometimes you get an inverted yield curve but you don't get a recession. Another idea around the yield curve is it's not really the yield curve inverting that predicts the recession. It's what happens like 6 to 18 months later when that thing uninverts. And we were inverted and now have uninverted. So I guess if there's one thing the bears, the people hoping for a stock market crash, the one thing that they can hold on to is that the yield curve has been inverted and has recently uninverted itself, and maybe that is supposed to predict a recession. But guys, look around. I mean, these asset prices are at all-time highs. You got the 3 major stock indices at all-time highs, median home prices, gold, Bitcoin, the like. You see, like, you go to the grocery store, you're still getting killed by inflation. So I don't know how we can have a conventional deflationary recession with this kind of inflationary backdrop. So I'm not really looking at the yield curve too much, you guys, but something to monitor, you know. So yields and, bond yields and interest rates are pointing bullish for these markets, you guys. Moving on to the 3 major stock indices, the Dow Jones down, last I checked, modestly. Markets are still open, so this could change a little bit, but all 3 U.S. stock indices, the Dow Jones, S&P 500, NASDAQ, all down modestly today, like nothing crazy. NASDAQ about 1%, Dow Jones about 0.5%. You're kind of getting the idea. That NASDAQ always being a little bit more volatile than the S&P 500 and the Dow Jones because it's levered to growth. It's growth. The stocks, the components of the NASDAQ don't really pay much in terms of a dividend, so they're growth stocks. They're a little bit more volatile. A lot of tech stocks too in there. So the three major stock indices have pulled back modestly today, but near or at all-time highs, you guys. Kind of plays into that whole, the dollar's weakening a lot, interest rate cuts are starting to hit, the easing cycle is here, and the markets are sniffing it out, and that's what's gotten these markets, real giddy and at all-time highs. Gold right now hanging out at $26.81 per ounce, up about 0.5% today. I figured gold would have been down today because oil's down about 5%, guys. WTI crude down to 74 a barrel. Crude oil took a hit today because things are at least temporarily calming down in the Middle East, and that's kind of bringing those crude prices down. I figured gold would have followed suit, especially because you have geopolitical tensions that are kind of loosening and going away for a little bit. That generally brings the gold price down. But we're not seeing it. Gold's up 0.5% today, and then, the oil's down about 5%. Silver right now hanging out at $31.71 per ounce. Platinum at $9.96. Platinum is less than half the price of gold right now, you guys, and platinum is more rare than gold. If you were to take all the platinum in existence, mined, that's above ground right now, it would fill to your ankles on one Olympic-sized swimming pool. So that's a good way to visualize it. It would fill you to your ankles on one Olympic-sized swimming pool. And if you had all the gold mined on the planet that's above ground right now, it would fill about 3 Olympic-sized swimming pools. So it just gives you an idea of how much more scarce platinum is than gold. So for platinum to be trading at $996 per ounce and then gold at like $2,700, you might have a deal there. Maybe think about doing a little bit of stacking. Maybe go get 1 ounce of platinum and just hang on to it. All right, it's an asset. It goes in there with the gold and the silver, gives you a little bit of diversification in that precious metals portfolio. So you could take a look at platinum, but no buy or sell recommendations on this channel. We've talked about oil being down 5% today on geopolitical tensions kind of going away temporarily. That's nice. Things are still very tense, you guys. It's a total bloodbath over there. But just for today, oil was trying to predict a real shortage in supply from a World War III, like soon. And that's kind of gone away a little bit. It's kind of caused those energy producers and speculators to just kind of chill and maybe postpone full-blown World War III or the next phase of World War III for a couple months or so. Buy yourself a little time. So oil's down about 5% today. Bitcoin at 67,000, Ethereum at 25.96, and Solana at 155, you guys. So looking great. Those cryptos are really coming back to life. I like seeing Bitcoin, at 67,000, pretty close to all-time record highs. And also like seeing Ethereum above 2,500, pretty strong psychological resistance there has been broken. And then seeing Solana above 150 at 155, we'll take it, pretty awesome. Probably some pretty strong psychological support for Solana at 150, so you kind of get the idea. So all good things for crypto. Moving on to those meme coins. Guys, I love meme coins, and they're coming back to life, so I did want to spend a couple minutes giving you guys a quick brief on the meme coins. Top 3 meme coins right now being Doge, SHIB, and Pepe. I don't own any Doge or SHIB, but they're great meme coins. They've got a lot of network effect there, very high market caps. But I like Pepe the most. Pepe the frog, the cryptographic frog tokens, Pepe on Ethereum. It's got about a $4 billion market cap. That's my favorite meme coin still. It's been my favorite for well over a year now. My second favorite would be Autism on Solana. So Solana's got its own ecosystem with meme coins. I like Autism, Harambe, Bonk, Retardio, Costco, Hot Dog, Retard Cat, Rocky, Little Pump, Chonky, Michi, Mother. Those are some of the meme coins you could look at in the Solana ecosystem. And then back to the Ethereum ecosystem real quick. You got the Pepe, which I really like. That's my favorite meme coin. And then you've got like MOG, so the ticker MOG, APU, ticker APU. Pooh, P-O-O-H, it's like Winnie the Pooh. That's a little meme coin. I got like 20 billion of those just laying around. Clown Pepe, the ticker for that is Honk. Also, I've been buying lately as well, Caitlyn Jenner on Ethereum. So, You know, Caitlyn Jenner launched her meme coin on Solana a few months ago, but the developer, Sahil, like rugged her and turned it into this huge scam. So she had to move over to the Ethereum ecosystem and launch her coin there. And I own a little bit of it. It's rugged really bad, but I've been buying a little bit more of it. So I don't know, just to kind of give you an idea, about 750 million Pepe, 450,000 Autism, 30,000 Harambe, 6,969.69 Retardio. You kind of get the idea, 25,000 Rocky. I'm just kind of telling you guys some of the positions I have and how many. So there's a few $100, you know, in each one. The Autism's worth about 5K as of this morning. Pepe also hanging up there. The 750 million Pepe I'm holding worth still about 8,000. So really cleaning up on the memes. I mean, just between Autism and Pepe, that's like $15,000 in meme coins. And then we just talked about the others. Oh, one more before I forget. Another of my favorite meme coins on Ethereum is Harry Potter Obama Sonic Teninu. The ticker is Bitcoin. It's the people's Bitcoin, the thicker ticker, the coin who lived, the end game, you guys. So go ahead and check it out. Pepe, Harry Potter Obama Sonic Teninu. You know, Michi, Mog, Apu, Autism, Retard Cat. I'm loving it, you guys. So just letting you know what's on my radar. That's really all I got for you guys for right now. You might be able to hear my cat's asking to go in, so I'm going to go let her in and get on with the plan of the day. But thanks for hanging out with me. I hope this video finds you doing well. Like, subscribe, comment, share, whatever. You guys are awesome. Till next time.